Dad joke trigger warning. This stock has a bullish descending wedge. A wedgie. You get it? Hi, this is Tim from Trading Strategy Guides. I'm sorry, guys. Sometimes I just can't help it. Maybe I need professional help, like a professional joke writer or something. Anyway, we're going to look at a great bullish descending wedge on a good stock today. Okay, Uncle, I'll tell you, it's McDonald's. The stock is McDonald's. Whew, you guys have got to let up on me. Anyway, I'll show you the setup in just a minute. But first, let's look at our one open trade, then a new factoid of the day, and later on we'll get to today's trading maxim. Hang your hat right here for a bit. Remember to click the subscribe button and hit that bell so you don't miss the next great Forex setup. Alright, here's our one open position. Friday's close on the Great British Pound Japanese Yen look really bullish right here. And it looks like we had a little bit of a pullback, and now it's pushing up again. So this is nice. I moved the stop to 139 to lock in $1.88 on this one. If I get a higher high above here, I will move the stop up some more. All right, you ready for today's news nugget? Now, here's some surprising news. $1 million won't buy as much as it used to. Wait, you already figured that out? Oh. Okay, I'm sorry. Apparently the millennial generation is being blamed for this. You know, the kids born between what, 1984 and 1997 or something. Look, I'm a baby boomer. My kids are millennials, so I personally have a real soft spot for millennials. And my experience with this generation must not be as extreme as other boomers. Yeah, I get tired of hearing boomers complain about millennials all the time. I find millennials to be typical 20 or 30 somethings, just like I was in 1980. So maybe we boomers are just too detached from our 20s to remember and understand. Anyway, I digress. Apparently it's all the millennials' fault. You see, millennials are the biggest share of home buyers right now at 37%, and they've caused a real climb in housing prices. According to the real estate site Zillow, in Nashville, Tennessee, $1 million will buy you about 3,637 square feet of home, which is down 28% from 5 years ago. In New York City, you can get about 1,725 square feet. In San Francisco, California, you're looking at 1,150 square feet. Mind you, this is with $1 million. This is what you can buy. In the U.S. nationwide, $1 million home average is 2,192 square feet, down 14% from 2014. But you can get 4 bedrooms and 2.5 baths for that. Out of curiosity, I checked Zillow to see how much of a home you can buy here in Hunt County, Texas for a cool $1 million, and it looks like it's in the neighborhood of 4,000 square feet, or 6,000 square foot commercial lot, or 60-ish acres with 2 farm homes. This is kind of a rural town after all. Let me know in the comments if you'd like $1 million home or if you have more modest tastes like myself. Hat tip to the Morning Brew for this piece of news. I'll include all the relevant links in the description below. All right, let's take a look at this McDonald's setup. I love to see ascending and descending wedges. I think they're powerful patterns. Here's a great example of a descending wedge on McDonald's right there. It's simply a compression of prices in a down-pointing wedge like this one. Remember, they are rarely perfectly symmetrical, and symmetry or lack of symmetry doesn't seem to have any effect on the outcome. Of course, I usually won't even look at a pattern if it doesn't have declining volume and declining volatility along with it. That kind of indicates decreasing trader interest in the pattern. And of course, the volatility is measured by the ATR, or average true range, which shows us the average length of the last 14 candles. So here's our trading plan. we will simply buy a daily close above the wedge. On the breaking candle, to enter a full-size position, you want to see the volume bar reach all the way up here to the volume average. If it doesn't reach the average, but does reach at least 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing the volume number by the volume average number. You should get at least 0.75. If you don't get that, stand aside on the trade. Your stop loss will be 1.5 times the ATR. Your first target will be 1 times the ATR. So again, on the breaking candle, look over here at the ATR, multiply that by 1.5, and then measure down from your entry. Let's say the entry was right there. You want to measure 1.5 ATRs back here. For your stop loss, you want to measure 1 ATR up here for your first target. If after entering the trade, we get a candle close back inside the consolidation right there, we'll take our loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, typically I do this with 2 positions. The first position has a hard stop loss and a hard take profit. The second position will have the hard stop loss and no take profit. And we'll move our stop up to break even and let the second position run after our first target is hit. Also, I only risk a maximum of 2% of my account on each trade. No single trade should make or break you. And that's our setup today on McDonald's. I tell you this every single time, and I know you may be tired of hearing it, but I want to make sure that you remember that I'm not telling you what to do here. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. But if you've developed a trade management plan that works better for you, by all means, use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology to find the best strategies for your own trading. And psychology is, in my opinion, the most important part of trading. And the trading maxims are my way of handling my personal psychology. And today we'll dive into the archive for our trading maxim. A maxim is a general truth, fundamental principle, a rule of conduct, or a proverbial saying. The maxims I share with you are just things that I come across in my daily cruising through life. The purpose of my maxims is to motivate me to discipline. Discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today's deep dive into the archive, Tim's trading maxim number 49. Success seems to be connected with action. Successful people keep moving. They make mistakes, but they don't quit. Conrad Hilton. If you think Conrad Hilton has something to do with the Hilton hotels, then you would be totally right. I don't think this quote requires any explanation. Keep going no matter what. Fall down, get back up. All those things. Action is required for success. Just do it. And while you're just doing it, remember our McDonald's trade plan here. We're going to buy a daily close above the descending wedge. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And look here, you can sign up for my Trading Picks email list. I'll be sending out 3 or 4 trading picks a week, everything from stocks, futures, to cryptos, to Forex, and you'll get to see them first. And the best thing is, it's free. I'll put the link to this below the video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade set up or two on each one and maybe some extra Q&A or training on Wednesdays. Don't hesitate to ask any questions you may have. I'll either answer your questions right in the comment or in a training video, or maybe both. And remember, the only stupid question is the unasked one. Also remember to tell me in the comments below about your $1 million dream house, or maybe about the $10 million dream house you've already got. That's okay too. Follow me on Twitter. Sometimes I post things there. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great week, and I will see you next time.